February 8th, Wednesday. Another good, successful trading day. As you can see, there's some days that are skipped in the video series. That's because we do not trade on heavy news days, so red folders and orange folder days. That way we avoid being the fact that the DR lens and the DR drive are a little bit less accurate on those days, and it protects our capital. So, as we can see, we are in a downward expansion model. We did have this little blip above, but ultimately we are in a downward expansion model. We are sitting right now at 10:20 candle, 10:35, 10:30. Okay, 10:30 candle comes and we get our confirmation. So 10:30, so let's bring up the DR lens. We already have it set up for Wednesday, 10:30, true and short. So let's go through our numbers here. So we have our SD extensions. We have 0.6.7. Another one at 9 and 1. 1.5 to 1.7. And then 3 to 2. So let's go ahead and get these marked up. So 4, 5. So 4 to 7. And then 9, 1. And then 5. Okay. So we have 4 to 7, which we've already pretty much gone through. And we've hit the 0.5. Okay. So we've already cleared through those, cleared through that one. So let's mark out our 0.9 to 1 and then our 1.5 to 1.7. So roughly around 0.9 to 1, which is pretty much what we've already tapped with this one. And then we have our 1.5 to 1.7. The other way we can make this a little bit easier on ourselves is if we go into our indicator, our drive indicator, we can go ahead and give ourselves the get those up on our chart. Ah, there they are. Okay. 1.4 to 1.7. We have our 9 to 1. And as you can see, these are really close together, being the fact that it's a very small RDR session to start off with. So, like we said, we've already pushed through our 0.6.7, so we marked up our 9 to 1 and our 5 to 7. Since we've already hit 0.5, we'll go into our median retracement of 0.5. We have 0 to negative 0.1, which would be inside of our IDR range, and then we will go with our biggest out here, which is our 0 to 1. So as we can see, 0 to 1, and then 1, 0 to 1 on the other side. These would be our retracement. That's after our 0.5. High low for the day, 0 to 1. Pretty much lines up with the 0.5, and then 0, 1, 2, 3, 4, 5, 6, 7. We could make a deep push back inside. So we could label those out, but from the way price action is looking, we will see. If we blow through this zone, we'll go back in and we'll mark up the other ones. Going through more of the data, we'll go through our extension times. So our biggest push is going to be first thing, which we've saw coming in out of our RDR session, our 1 hour. going into our first hour of the day. After we have a big push, we have another extension push at roughly around 11:40. So let's go ahead and mark that 11:45. $11.40, give or take. That's going to be our max extension time. Okay, go back to our chart. We have another one at roughly 1400. And then our last push at the end of the day, just around 1510 to 1520. Okay, and now let's go look at our retracement times. We have our first real big retracement is going to be first thing, so roughly around the time we're at now, which we saw we kind of got our confirmation and went straight back into the DR range. So that would probably explain this little bunch right here, but we'll mark it out anyway. So we're looking roughly at 1040. That is our retracement time. We have another one, another big retracement at 1150. Another one at 1250. Then 1400. So let's go ahead and mark out our 1245. And then our 2 o'clock. Yeah, it's roughly around 2:15. So it'll be pretty close to see what price decides to do around this time. And then our final push or retracement, probably around 315-ish. So let's go ahead and see what that lines up with. So as you can see, the last two areas of the day, they tend to do this on a bunch of the other sessions. They'll be pretty close to each other around this time. It tends to just kind of stay in the same direction if we're going, especially towards the end of the day. You'll see on the information, the last 45 minutes to an hour tends to be the biggest push. So what you'll see in a lot of the other sessions, like I said, is once we are in a direction, we tend to stay in that direction. So we'll get that big push towards the end of the day. So if we're in a short, it tends to stay in the shorting. If we're going long, it tends to stay long. So that's, you'll see the confusion between the two, but you'll see hopefully what I mean when we get to that time. So we have our zones posted, our times posted, and everything like that. Let's scrunch up our screen and look for any previous levels that line up. Okay, so we have a big set of levels down here. And as I said in a previous video, levels from a previous session, especially the key levels, are very important. Price tends to react to them, so we like to mark them out, whether it's with a zone or a straight line, just so we have something to note that price will react in those areas, and we could see some type of reaction. So we have another big, do another area here, And then we will do this last area down here to kind of cover everything up. We have all of our zones, our previous levels marked up, and now we are watching price. So we saw we had our confirmation immediately during our retracement time. We made that big impulse move down and another big impulse move back in. Okay, and now we've broke out. This is a very, very common pattern you will see. So if we get out of here, we stay out, we are respecting our DR level. So we're going to put in our first trade here. We'll start it here. 2 ticks above our key level. So 1, 2. And then we can aim for our zones. So as we see here, we have a VIB here. We've ultimately, it lines up nicely just above our extension zone. So we will target right there. Even though it's a little short, we like to see 1 to 2 above 1 to 2. We could go for longer. We do have our key levels down here that align, especially if we push right through that VIB. So we can see a push down. So we can go ahead and go down to one of our key levels here and see what price does from there. That gives us a little bit better risk reward, but we could have gotten in here, which would have gave us a really nice risk to reward of 1.9, and then put our stop above our zone here. But obviously we want to see multiple rejections. We only really saw 2 here. This doesn't really count much of a rejection other than rejecting off of the DR level here. So we would have entered, I would have entered here, which I did, and I had my stop 2 ticks above since we respected that level and respected our zone here. I did target our standard deviation extension here. If we go back to our data, we could see our extensions here. We can see an extension all the way down to 3.2, 4, 1.9. We do have a big grouping here at 2.4 to 2.7. So if we go back to the chart here, 2.4 to 2.7 does line up nicely with another one of our zones. So we can 2.4 to 2.7, roughly about that. So our initial target should be roughly around here. Which is the trade that I took during the session. So let's play price. We saw that we had our beautiful rejection, respected our deal level. Once again, we got in, we respected the DR level. That's a third rejection off of from our DR level, so we are in a very good position. Price is moving down. With this candle here, some people would get scared out from the pullback. The biggest thing is once we get to 1R, so that would have been right about here, I would have been broke even. So I am technically in a risk-free trade, because what I'll do is I will go slightly below or above my initial entry, so I can get my commissions and everything, and I'm not actually in any type of drawdown. So we are technically in a break-even trade right now. And price, as we can see, put our target back down. Which we can get a little bit more accurate of an area by putting in our 2.4. Okay. And moving along. And we are pretty close. We do have our tick grid is getting to a very low level right here where it is pretty much exhausted. It's possible it's going to start making a push back up, which we do, but then we get taken out by our profit target is hit. So a good 4R trade right there, which we were break even on. So even if we would have came back up and hit break even, it would have not been nice to lose the 4R of profit, but it would have been a break even trade nonetheless. So now we just sit and wait and let price do what it's going to do. We do not trade against the confirmation. So even though our tick grid is showing that we have rejected, we've gotten into above 800 on it, we are now pushing back up. I do not trade against the confirmation. So price can do whatever it wants. Plus I'm already up 4R for the day. So now the only thing I want to see is some good price action. As we can see, we have pulled back, pushed back in. We are once again above 800, so we are looking at a exhausted price action right here. So let's go back to our DR. Let's see our retracements. So as we saw, we had our 0.1, 0 to 0.1, 1 to 2. We have our 4 to 5, which is after we've hit our 0.5. Which tends to be the one that I go off of a lot. And then we have our before the high and low of the day. So that would be 0, 3 to 4. So roughly between 3 to 5 is what I would look to hopefully see a pullback here. So that would give us a 3 to 4, so 3 to 5, which is right here, which would be what I would be looking at for a retracement, which aligns with our max retracement time. It's a little bit later than it, but we're somewhere still in the ballpark. If we go back to the data, our retracement times, we are roughly around this area right here. So you can see that even 310-ish, we are still in a retracement. So if you were to even take this and go over to roughly around 310, you can see that we are in our retracement time window still between those two, and we've tapped into an area of where our retracement is. This would have obviously come back in and nicely tapped us break even, but we hit our profit target down here. So we see price, it is rejecting once off of that zone with an exhausted candle down here on the tick grid. We have 2. Price seems to be pulling away from us here. There's 4. This is where I entered into my second trade of the day. I went with a very tight stop loss, 2 ticks above, and aimed for a new low. Low is hanging fruit. So if it is to come back up and want to stop us out, it can, but we have a very tight stop loss, like I said, and we're going for a new low. Next candle, great push away, exactly what we want to see. As we could see, though, we, to the tick, hit a VIB, which we then pushed through on the next candle, made our way down, and as we could see, as we were going up in price here, and we kind of leveled off, our tick grid gave us a beautiful divergence to show us that we were going to head down. We have what is considered basically a hidden divergence. We've gone flat on our price, but we went down on our tick grid. So that's another confluence to get into a trade. We came back in. We had 1, 2, 3, 4 rejections off of this level. We had our tick grid going in a divergence to the down. We obviously do not want to see price go above our area here. It has respected and not pushed back in. Our data lines up. And that is a bunch of confluences to get us in the trade. As you can see, we've pushed down. We created a VIB here, which price wants to come back and touch. We are officially break even. Like I said, at 1R, we would have gone break even. So that would have been pretty much after this first candle had finished. We would have went break even at 3R. Because it is towards the end of the day, this is where I like to trail my stop. So we made this push down until we break this low right here. I will not trail my stop because I want to see it actually break right there. The price is coming down. We still have not broken this area, but we have now tapped into another one of our key level areas. So if we look to the left, we are in one of our key level areas where price did respect. It is coming back up, but we are break even. So even if we lose, we already are up 4% or 4R on the day. So we just keep going. Price comes back up, closes this fair value gap, taps into this VIB, and pushes away. That's exactly what we want to see. If price would have came up, obviously it would have hit our stop loss. We would have went break even and then probably re-entered for the last end of the day push. Okay, our tick grid, it showed an upward movement as we were coming up, which is beautiful. And then it showed us the nice downward movement. So we are in alignment with our tick grid. As you can see, our tick grid is pretty flat here. We are pretty flat here. So we are 100% from this divergence working with our tick grid. So we have now officially broken this low right here, which was one of our swing lows. So I have now trailed my stop just above this last swing high. So that would put us already another 3R if we were to get stopped out. Oh, it's close. Good push away. As you can see, we tapped and respected. We tapped into this VIB, and we respected basically this key level. And price has gone down and taken us out and tapped into our last standard deviation extension, which is fine. We just wanted to see a new low. We could have came down for a little bit more of a profit, but a new low is good enough. So 4 and 8, 12R, and as we could see, we have our extension time, which we've came down to here. Then we started doing our retracement at 215, respected it, and then came down. And now, as you can see, we're closing into our max extension time again. And we've turned our corner. So this is a little late in the day. Wouldn't get back looking for nothing else. And then the market is closed. So all in all, 12R for the day. Not a bad day of trading. Utilizing the key levels from the other sessions to give us some good areas of targets. And obviously, as you can see, our standard deviation extension down here was aligned beautifully with this with the key level zone. And as you can see, price within all of our time limits acted accordingly. Thank you guys for coming out. Hope you gathered something from it, and I hope to see you next time.